Yeah. So if you look at price here, and I'm looking at price without the wicks. I wonder if you could take the wicks off. Let's see. Um, sorry. Wicks. How do I do this? Canvas. Okay. Anything for wicks? Wick. Alright, dope. Okay. So we can't replay, right? Okay, so from here we can see without the wicks we can see what price are really doing. This is all volume, real orders. So high, low. We could check this out. See, went down to 50, below the 50%. Pushed up. Okay. We have gaps here. So without the wicks, you can see there's legit gaps in price action. So price took this high and that high back there, that old high, came down into the gap, formed a high here, formed a low here. There's a low here, high, lower low. There's a gap right here that it made. Right? Price came into the gap. Excuse me. Formed a lower high again inside the gap, another lower low. So from here, I can confidently say that it's going down. Yeah, so price came down, engineered, look at here. Engineering liquidity. Price came down, came up, took out whatever stops were resting up here. Kept going up, took out the stops over here. Boom. Came down. Excuse me. Went into this gap here. Came up. Has its own gap down here that's going to be need to get into. So price came up. So I have to measure this. This is 50%. 50% is right here. So could use to go down. Yeah. What is this doing here? Man, shit won't go away. There it goes. What the hell? Excuse me. So anyway, so high was formed here. Low. High. Lower high, lower to this one. Came down, formed a low, came up into this gap, pushed down and formed another low. It's bearish to me right now. So selling. And let's see where I would aim. So let's see. The low. Swing low. Swing high here. Okay, sorry. Had to figure out where the real low was. So this is the last high that was broken. I'm really sorry right now. Okay, this created a new high. Okay, here we go. This high was broken. Price came down, formed this low here, and from this low here we came up and took this high. Okay, so this is the current range. From here to here, 50% is here. I feel like I made that way overcomplicated. Okay, so that's target. Man, this is much different to do than when the market's moving, bro. Because in real life, when trying to figure this shit out, it's moving. Alright. Target. Alright, so this is wicks off. To me, it is bearish. Well, let me see. Yeah. Market, yeah. Low. No, I didn't. Low, high. Yeah, that's a swing high. Low, market structure shift. High, respecting the gap. Came down lower. It has to, man. So let's see what happens. Okay, well right now we're over a G profit, but let's see. Okay. So that was a fake out. So let's see, how should I have seen that coming? Using just this, there was a market structure shift here. Then there was a low, a high, a low. Market structure shift, down, high, lower low. Yeah, I don't know. One low and a high. A low and a high. A low and a lower low, actually. A low. Low and a lower high. Lower low. Lower high. Yeah, this was the other shift right here. Jacked up. I gotta do this tomorrow. Sorry. But the reason I was recording is because excuse me. Cause see these wicks, yo. These wicks are just set up for grabs. Because if the body of the candles are like the real volume, the real orders, then these wicks are just set up to generate liquidity, have liquidity pulsing on top of them, people going long from there. Excuse me. And this is why it comes back and takes them out. So I guess one way you could tell if the market structure is shifting is you can check when the last high was taken. No. You would check where the last intermediate term high was taken. If the price is bullish, price is going to be taking, if price is bearish like it is now on the screen, that means price is going to take out these intermediate term highs inside of bearish fair value gaps, right? So this one here got taken. This one here got taken. No, well that's not a fair value gap, so that's not an intermediate term high. So this one got taken out. Now, if price is bearish, it should fall from here because there's no more intermediate term highs to take. You see? So if price is bearish, it needs to take out all the intermediate term highs that it generated on its way down. Right, this is a bearish move, created intermediate term high. The intermediate term high got taken. There's no more intermediate term highs to take here. None on its legs, done. So if price is bearish, it's gonna have to fall. It's gonna have to fall, and then it's gonna start taking out intermediate term lows like this one here. So when it starts taking out intermediate term lows now, then we know that the market is bearish. So let me just play this out to make sense of what I just said. But I know has to be truth in it. Okay, so let's see where price is going. So here, okay, so I'm gonna go for sell. To me, if price goes any further, if it breaks this here, I don't know, let's see. But to me, if price goes any further, then it's shifting market structure. You know what I'm saying? Yeah. Because as long as it doesn't go past the last intermediate term high, then should be good money. Shouldn't be going any higher. Let's look at the 5 minute. Okay, that just pierced the 5 minute. Excuse me, but if I want to do big money, I could stick to the 15. The 15 should not. Let's see what happens. It shouldn't create a huge candle. Yeah, so let's see. If it respects this, then going down. And we should create an intermediate term low in here. Let's see, I don't know. Okay, first sign, if it keeps going, that we're bearish. Okay, it should not take this out. This here should not be taken out. If this is taken out, then we're bullish, in my opinion. Because if it's bearish, let me think, if it's bearish, it should come down in here, create its own intermediate term low, right? To generate a pool of liquidity, come back up, you know, maybe consolidate, do whatever, come back down and take it out. But this should be protected if it's bearish. Yeah, that high should not be taken out. So let's see what happens. As soon as that's taken out for me, if it's taken out before it makes an intermediate term low, that's what I'm saying. Okay. Okay, so that's my target. Anyway, let's see what happens. So if it creates an intermediate term high in there, we're bearish. Okay, let's go. Oh yeah, okay. So this moves down to here. Now I hit my target. What would I choose to do? Okay, so I would sell 3. I don't know. I just want to get rid of 2 of those, whatever this all means. Okay, so I want to sell 3 to mofos, but if price goes above this, I'm stopped out. Because I hit my target, so I can get out now. I mean, if it was set up in real life, I would have been out as soon as I touched this. But let's say I want to maximize profits. My stop loss will be right there. Yep, I would have been taken out. Okay. So now we can X out of here. Okay, so to me, because it broke this intermediate term high. Okay, let's see. Came back and took it. Which means we're still bearish if it respects it. If it doesn't respect it, we're bullish. So this is if this pushes back down and keeps going down. So in other words, I need to see a swing high, yeah. If it forms a swing high, then we're bearish. That's good. So I mean, it's not just all consolidation. Let's see what happens. Okay. So, yeah, maybe I got in too late, but let's see. Oh, shit. Okay, so at this point, damn, we had to wait and see. So I gotta close out of this. At this point, because it hit my target, now it's in a gap right here. So if this intermediate term high gets disrespected, then we are bullish, because that means it's respecting this low, intermediate term low. If this intermediate term low gets respected after it's formed, meaning this gets taken out first, then to me, price is bullish. I'm going in long. So let's see what happens. Damn, just overpowered that shit. So to me, sell. Because this formed a intermediate term low. Price came up and just totally disrespected it. So it's respecting this intermediate term high over this intermediate term low that never got to enjoy its life. So I'm going for a sell. Let's see if I'm right. So that means, wow, I don't know. So there's another big one here. Maybe it's coming to take that one. It's probably what it's going for. This right here is rough waters, all consolidation. Okay, well this broke out of it, so we're good. That consolidation's been dealt with. I'm talking about is a long wick, that's consolidation. But you can see price went down first and then shot up out of the consolidation. Yeah, things didn't go lower. It has to go lower because it just broke through this gap. So it wants something lower. So it's not gonna, yeah, there's a gap here. I could hop in for some more. Okay, fair value gap there. Let's see if it respects it. It should. Because it didn't grab anything from down here. It's like it's going back up with nothing. It's got to come down and at least grab this. Some liquidity so we go back up. Because it broke through this gap. Why would it do that? The algorithm would not do that unless it's grabbing something down here. Unless it wants something. Because it should have been respected, but it wasn't. I bet you I'm right. Let's see, but I bet you I am. Damn, okay, well maybe not. Maybe I was boom. Yeah, now what? Let's see. It wants this here, intermediate term low. Now once it grabs that, then it's bullish to me. That's a market structure shift for real. Boom. Okay. So it grabbed that. It took out an intermediate term low. So it went from grabbing intermediate term highs, right? This one here was grabbed. So this one was grabbed here, boom, intermediate term high. Price came up and took it out, right? Then it created a new one here. This is a new intermediate term high after that one was formed. So price took out the previous one, created a new one in the gap. Alright, price came back and took it here. This whole time price is bearish, forming lower lows and lower highs. Alright, so this high should be protected now because there are no more intermediate term highs to grab. You know? And actually I would argue and say I can keep price on top of this. The last one I was taking out, and I could stretch this out and use that as a stop loss. So yeah, price came down, you know, it's forming lower lows, lower highs, formed a high here in a gap, intermediate term high, right? Now, because this is yeah, so this is a new one, right? Because it's intermediate term high, was not taken. Anyway, I gotta watch a recording. I lost myself. But damn, this was fire, whatever the strategy was. Okay. Let's try to remember what the fuck it was. Because so far it's been on the fucking money. Makes lots of sense. It's powerful though. Holy shit. I need to remember this. This is powerful for real. How far back can I go? Replay to this date. Replay to this date, yeah. Okay, so let's see, replay to this date. Oh. Okay, so we see here, boom, price. Create an intermediate term low here, which got taken. When intermediate term lows are, when price is bullish, it takes the intermediate term lows, which is a swing low inside a fair value gap. It will take it out and move up if price is bullish. When the intermediate term lows get disrespected, price is bearish. When intermediate term highs are taken, price is bearish. So on a leg, when the market structure shifts on a trade, let's say after a high is taken, like over here, you take buy side liquidity, it's taken. When price takes its first intermediate term high out, price is bearish from there on. You can go for a sell and set your stop loss right above. Hold on a second. Yeah, sorry. So this is the very first one that got taken out after buy side liquidity was taken. The very first one you mark it, right? So you mark it and you just wait for it to be taken out. If foreign price is going to do whatever it's going to do, it's going to come back as soon as it takes that one, the very first one that was formed. You can move you could take a sell like as soon as it's formed. I wish I could rewind some more. But as soon as it's formed, just go bonkers with a sell and put the stop loss right there. If it's bearish, which it should be, if it's the first one, if price is truly bearish, then you can take that short and this stop should not get hit if price is bearish. So this got taken out. Set your stop loss. If price goes and breaks it, then you know price is bullish. Price is bullish, like you can't really lose, man, to tell the direction. And here's a market structure shift, the first sign, because hold on. Higher to move lower, lower to move higher. Yeah. If this broke lower, price should have went higher. If bullish. Okay, my brain is just spacing out and thinking about shit, so alright, so that was the first one formed, got taken out. Okay. If price is bearish, as it's showing now because it took it out, made a lower low. So right there, yeah, sell. Yeah, leave it at that one. Okay, so price is bearish. We have this swing low here, but no, it's gonna take it and drop lower. Now I explained this earlier in the video, and I gotta remember the philosophy. So talk this through. So took this high, price gone lower. So it has to create intermediate term highs. Yeah. If it's going down, it has to create fair value gaps on the way down. Inside of fair value gap, it's got to create intermediate term high. It's got to come back, go down and come back to take that high to sell lower because it's bearish, so it's selling lower, right? So like this one here, price went down, engineered an intermediate term high, came down, came back and took it so it could go down. It's going to do the same thing, down. So if we get to this point, if a intermediate term low is established, right, and the next candle doesn't take it out, meaning when I say next candle doesn't take it out, meaning next candle doesn't go lower than it. So in other words, what I'm saying, it establishes an intermediate term low. That means that it wants to go switch directions and go bullish, because it's not going to create intermediate term lows unless it is bullish. Because for the bullish action, it's going to create an intermediate term low to engineer liquidity under there. It's going to move up, come back down, take out that intermediate term low to grab the liquidity and then sell it up higher. So let's see what happens. If it does not create, okay, to me, hold on, that shouldn't happen. Oh yeah, no, that's supposed to happen. That is supposed to happen. And all I had to do, right, because has not been taken out yet. Trying to think how I could have avoided that, because I'm not thinking 100% straight right now. Because this was taken out, then it formed another one, and then it formed another one. So took out this one, sold down, boom. Okay, so it took that out. Now, move that there. Okay, so now see what happens here. Okay, so if it's going to go down, it'll form an inverse. Okay, let's wait for intermediate term. Right there, high to form. Okay, so this is where we decide which way it's gonna go. If it forms its own intermediate term low here and comes up, then we are bullish. That means this one is stronger than this one. Well, this is the last intermediate term high that was taken before price was started moving down. So that means it can't go any higher than this unless it wants to be bullish, because this is the last swing high. I mean, this was the last intermediate term high to be taken. This one here. It's the last one. So this high is protected because it is the last one. Because it is the last one, there's no more up here to hit. It would have to come up and create a new one. So that means it's bullish. So that's the thing. Alright, so price. Okay. Forming a swing high there. Now we don't know if it's a swing high yet. Okay, in volume, I would go for a sell and stop loss, but that's a crazy stop loss, but the risk is worth it. Okay, so here's the moment of truth. Okay, let's see what happens. If this creates an intermediate term low and comes up and breaks that high, we're bullish. But you know what? Might come up and tap it. Okay, so this swing low just into the gap, just got ran through. Here's another one. Let's see if that gets established. Nope. So, to me, that's bearish. That's off. Oh, let's see. Nope, bearish. Okay, so at this point, because it ran through this fair value gap, because it ran through there, that tells me it wants something below. It's not going to run that gap. Run through that gap unless it wants something below the gap, right? It's seeking something lower. So there's this low, intermediate term low, that has not been taken out yet. There's liquidity sitting under there. So this tells me price has to be coming for this, right? It has to. Why would it break the gap? It can't break the gap unless there's no buyers in here that need to do business inside this gap and come back up. So it's going straight down, selling to these motherfuckers down here. Has to be. Now the thing is, after it takes this out, is it gonna come up or is it gonna keep going down? Now if it takes this out, yeah, it's going up. If it takes this out, it's going up. Let me rephrase that. If it takes this out and forms a swing low, yeah. But I know it's going for this, so just target that shit right there. Boom, see what happens. So there's a, okay. There's a gap in here. Let's see if it respects it. Okay. More liquidity pool engineered. Okay, so that's intermediate term high inside a gap. Now if this does not get taken out, no, if it does, yeah, these didn't get taken out yet to come down. Not sure what that means yet, but I don't think it's going to take any of these out because it broke this fair value gap. It just wants to go straight down here in any case, so nah. I was going to say it could come back up here to sell down, but no. It has to take something out. It needs to take this out. It needs to grab this liquidity first so it can sell it up top. Because it broke through this gap. After it broke through the gap, it didn't take any sell side from this side. So it's got to get to it. It's got to get to the sell side, which is over here. Because it's selling orders to these people. It bought the orders here when the price ran through this intermediate term high. A bunch of people stop loss hit, so it sold it to them at this price. They're coming down. They sold some here, sold some here. And then, yeah, so this should get respected because it needs to sell it here. That's why I went through the fair value gap. It needs to sell it to more, so that should be respected. If it doesn't, I have to change my bias. Oh shit. From here, I had to change my bias. Okay. Okay. It has to close above that. Because this, nah. I say it's kind of bullish, man. Damn. Let's see. because this one's gonna be a learning lesson to me. And I think I got it right earlier. Ugh. Plus, wait. The most important thing, man. Okay, yeah, 50% already counted for that. I want some like Snickers where it would have been. Okay, well, take it out intermediate term highs. But I don't know, let's see. Okay, so I did want to sell it. Yeah, because it broke through this gap. I had to go down here. Okay. So now, what should happen is, but I knew it was going to switch after this got taken out. Okay, so difference here now. Look at that. Boom. Took its own shit out. Intermediate term high. So intermediate term low. Nah, not even. Damn. So here's an intermediate term high here. So the ones that's been pierced through are the protected ones. That's why I said draw a line out. This one has not been pierced through. So these, talking about the ones inside of the first one inside needs to be taken. First one inside is taken. Okay, so nah, what I said made fucking sense. On the way down. So down. But it's true though, I have to take these out and sell down. Can't take these out and go up. So as long as price keeps creating these, what I'm saying, created it here, then it wants to go down. So now it took out a bottom, sell side. Yeah, this needs to be changed. Okay, so sell side got taken here. Is it in the gap? No. The last gap is here. The last intermediate term low to get taken is right here. So let's, the last intermediate term low to get taken is there. So what does that mean? When price is going higher, it takes out lows to go up, creates a fair value. Yeah, okay, so let's see what's gonna happen here. Is it gonna create a intermediate term low? Okay, it did. So boom. But that's not an intermediate term low at all. It's just a swing low. Okay. So we need to see if it creates. Okay, so fair value gap. Let's wait for it to create an intermediate term low. Okay, it did not. So to me, this is still bullish. Right now, to me, it's still bullish. I mean, not bullish, sorry, bearish. That's what I meant. It's still bearish. Did not create a, yep, still bearish to me. Is there, okay, so right here, take out another. It's about to, let's see. Did it or did it not? I don't think it did. The low is 23.20. $23.20.75. Okay. Yeah. 23.21. Okay, so this took it out. All right, so let's look for. Anyway, it doesn't even matter. We're looking for bullish fair value gap with intermediate term low inside of it. So I'm just gonna try something. This is just an experiment. So if I'm gonna sell, okay, I'm waiting for. There's a gap here, right? Forms an intermediate term high. Still bearish to me then. Intermediate term high here. So to me that's still bearish as fuck. So when would you get out? Like, to me, I know that's when it's not necessarily. What has it done now? So no. To me, it's still bearish. It needs to take out an intermediate term low for it to finally change directions. That's what I'm guessing. So like right here is one. No. Damn, it's not even a valid one. Nah, there isn't one. I mean, this one doesn't have one, so needs to create one here unless it wants to blast through it. Yeah, there's no intermediate term low there. I don't know where the fuck. Oh, there's no intermediate term low there, so it needs to build one. If it builds one, that means we're has to take it though. If it's untaken, yeah, price still okay. Yeah, so I'm looking for one that exists. Intermediate term low that hasn't been taken yet. Okay, so let's do an experiment. Whoops, to me is gonna blast through that fair value gap I just drew. I think, let's see. I think it's gonna blast through this because there's no intermediate term low in there for it to take to go higher. This is interesting. Hold on. I gotta watch it again and make rules. See, went through it. Okay. So let's see if there's one here. Nope. Okay, here's one. Was this taken out yet? No. Okay, so here, I'd say here. Here's where I should head to. I mean, there's one there, but it's like really deep. There's this one here that's fresh. Hasn't been taken out yet. Really fresh. So let's see if it goes for that. Like, I would fucking head for that one. I could do whatever, man. Okay, blue past that one. Okay, well, here we might have a sign. So blue past this here. Yeah, didn't create one inside this gap, so that might be a problem. Created one here. It got, let's see if it gets respected. Okay, let's see what happens here. Does it create one here? If it doesn't create one here, then it's bullish. Yeah, if it doesn't create one, that means it doesn't want to take anything to go lower. It doesn't want to take out any more intermediate term highs because it creates them so it could come back, take them, and go lower. So if it doesn't create, if it starts creating them, that means it doesn't want to go lower. It wants to go higher now. You dig? So Let's see what happens now. Wow. But I'm still bearish until an intermediate term low gets created. When one gets created, oh wait, shit right here. Stupid. No, it has to get taken out. So creating my own rules now. So this that would have to get taken out. Oh shit, I don't mean to be. Yeah. Okay, so here's a intermediate term high that was taken. And when price is bearish, it goes lower after this. So I guess the rule could be is after an intermediate term high is taken out, at the first intermediate term low that's formed after that, you know price has changed directions. And this one's interesting because the same fair value gap this gap took out this intermediate term high. And then a gap was respected on the other side. So to me, this is like buy, like a mofo. Now what price needs to do now is come back, take out this intermediate term low here, to go up. See what it does after it takes out the intermediate term high right there. So took one out here, intermediate term high. Okay, so it has to sell to this one or that one there. Okay, formed one here too. So you can literally just wait for one of these to get taken out. Let's go down one right there. There we go. Okay. No wick though, which is weird. Okay, so that usually gets taken out to go up if it's bullish. Okay, let's see, we have a gap here. Let's see what it does. Okay, so I want something up there. Let's go ahead and give that a buy. Okay, so intermediate term high. Okay, so took this one. Already sold here. That's taken already. So I can target this one. But yeah, to sell it down, but it might want to go back up. I mean, it wants to keep going up stronger. Well, we have to sell, right? To go up higher. So we took out these. So that got taken. So in other words, when we get a reversal, can target this sell side here, because this one hasn't been taken out yet. Okay, so let's figure this thing out. Okay, so that got taken out. And now, if this is created here, okay, it wants to keep going up. If it blasts through here, then. Okay, so if it respects this, yeah. Oh, that's why it takes out break structure. Okay, if it takes this, when I say take this, if it creates a swing low, yeah, if it wants to go higher, we're gonna create another swing low. If it wants to go higher. If it doesn't, we'll get an inverse. Wow, it's pushing the fuck through. So it wants this one then. It's the only one. Well, if it pushes through. Let's see what it does. Kind of look like it wants to push through. Shit. Alright, so let's get rid of that. We'll have to come up with technique. Alright, so Okay, so I think I'm making this harder than it needs to be. I got taken that needs to be taken. Okay, so let's see. Let's see if an intermediate term low gets put in there. It did, so what does that mean? If it gets taken out, price wants to go higher. If the top one gets taken out, price wants to go lower. Okay, so price is going lower. That's what I see because it took out, it created, and it took its own out. So if it took its own buy side out, I'm gonna have to watch this and break it down, but if it took its own buy side out, then it has to be going lower and it has to be going to this one right here. Yep, so let's go. I got what, 4 contracts? Yeah, let's see if I'm right. Like I would put, yeah, I would put a stop loss here. Damn, already. No, that's. To me, it's not the same, but it's liquidity grab. To me is going up, so intermediate term low created here. Wow, I really gotta do this a lot of fucking times, so it's just in my head, like clockwork. Okay, so if it's creating intermediate term lows, that means price is still bullish, and it broke through this. Broke through this. So to me, it wants to go higher, probably at least this one, the next one. Because it wouldn't have just created an intermediate term low here. It wouldn't have. Nah, for what? Only creates these when it wants to go higher. And let me see. Here. So from here, price created another intermediate term low. Broke here, so this got taken here, intermediate term high over here. Intermediate term low. Yeah, it's generating its own liquidity. Yeah. So to me, it's going here for now. Yeah, busted through that, dude. think so. I think this is gonna be. Oh wait, it takes out lows to go higher, right? Yeah. Broke through that though. It's staying here. It's going higher though, bro. Okay, so that one got taken. Create a new intermediate term low here. Damn. These are meant to be taken. There's two of them juicy ones. Okay, so price is going up. Yeah, it's got to be going up, man. Damn. For the next one. So this one didn't get. Yeah, I have to rewatch this because